Welcome back to Commercial Finance Experts Academy. My name is Su Trung, and I want to touch base more about the deal that we talked about yesterday on the last video. Now, most people that get into commercial financing, they don't understand how the process works and how the bank looks at every file. If this client went straight into the bank yesterday and wanted to get the $1 million loan to purchase, and they want to get the most lending as possible so that they can put down less. Everybody likes that, right? Now, the funny thing is this. They don't understand how the bank rules work, and they always assume certain things. When you go to the bank, most of the time they'll finance 75% of the asset base, which is the building itself. Now, they most likely will only finance between 50 to 60% of the goodwill or the equipment, okay? Unless you go into leasing and lease back and all that, that's much higher interest, and you don't want to go there because the cash flow is going to suck for the client. Now, let's look at this. If the client had came to me before they even made an offer on this, so now I'm seen as an investment specialist and expertise. Okay, when you're at an expert level, you can demand whatever price you want. Okay, and I can tell you this much: the client is more than happy to pay me between 2 and 3% for the financing. I don't know about you. On an $800,000 financing is what I'm going to get for this client. You can walk away with between 16 to 24 grand. 800,000 on residential finance, you do the math, right? 70 basis point, whoopie-doo! But anyway, so if the client came to me, I would have been able to do more than what I can possibly do right now. Because right now, the most you can do is, they're looking at about 75% of the 800, which is 7 times 8, just say 70%, is 560, 560, but now it's 4, so about 600,000. So I can do 600,000 financing on 800,000, and I can probably only do 100,000 to 120. Just say easy math, 100,000. Okay. Right now, there's only 700K possible. So between 2% is going to be 14, 3%, 21. So 14 to 21K, $14 to $21,000 is the potential commission that I can make on this file. Now, that is great. But what's better is if the client had came to me earlier and said, "Sue, I want to purchase this place. Could you help me to work out some numbers?" I could have told the client that, "Look, you need to go to the seller and make sure that they don't put a huge chunk into goodwill. Instead, they would have put money into the building itself." So he could have gone and said, "You know what? I'll only offer $50,000 for the goodwill because old equipment, old machines, right? The replacement value is per around $50,000 anyway. So I would rather you put on paper that this building itself, out of this whole deal, is worth $950,000. Even if he goes back, say it's only $900,000, right? Even if it's $900,000, I would have been able to finance 75% of that instead, right? 630s plus 54 is say almost 700,000. Right? That's $700,000 plus whatever the 100,000 is, 50,000, so 750 plus the 50K. So out of that, I would have been able to finance 750,000. Yeah, that's an extra $50,000 that your investor doesn't have to put out of pocket. He'd be more than happy to pay you your 2-3% fee. Does that make sense? So if I were a smart, savvy investor, it is more out-of-pocket expenses what I'm worried about rather than how much can I finance and all that, because out-of-pocket expense means a lot more. It's cash on cash, right? If you deal with a lot of investors, they don't care how much they finance. As long as you can finance as much as possible, if there's a break even or cash flow, they're happy. The most happier is that they can leverage as much as possible, because when you free up that $50,000 extra for them, they can leverage it and do another investment, buy another property, or buy another business instead, right? So at the end of the day is this. You position yourself as not just a go-to finance expert, but as a great investor advisor, right? Be able to mitigate all of this before even he make an offer, right? So the next time this client's gonna come see me before they make an offer. That's where my value really kicks in, right? Because they don't understand, is this, the realtor doesn't understand how the bank's gonna look at goodwill and equipment versus asset, right? And I don't think the realtor really cares how much you split up this percentage ratio. As long as they get the full commission out of the $1 million deal, they're happy. Right? To them, it's irrelevant. The other side is that, yes, the client might say, I don't want to pay too much capital gains, or I want to pay less taxes or commission, whatever. That's between the seller and the realtor, right? If you're gonna involve, you take care of the investor will take care of you. That's how this thing works, right? So hopefully you learned something from today, is that your position and your positioning of this prior to the purchase is even more valuable than just get the financing, right? That's why people come to see me. It says I offer way more value than just getting them the money. I'm saving them a huge amount of money and also giving them the ability to leverage that extra $50,000 towards something else. Yes, maybe some of the money went to my pocket, but not all of it, right? Maybe an extra $7,000 went into my pocket because I have to finance an extra $50K. 2%, okay. Up to you, right? It's only an extra $1,000, not much more. So they get to put more of that money, $35,000 or $40,000 extra that I save from them for the down payment to the next project that I can help finance as well. How do you like that? Right? Anyway, if you like my videos, click like, subscribe to it, and you see the next one as I upload them every day. Look forward to hearing from you. Just email me at sue@sharingbanksecrets.com if you have any questions. Take care. Have an awesome day.